What is going on, YouTube? It's the Dividend Investment Guide here again with another episode. Today we're just going to be going over a few of the stocks, how they're doing in the portfolio. Don't forget, guys, if you are watching, you are enjoying the content so far, it does help me out a lot if you hit the like button. Also hit that subscribe key. Obviously, I do have a goal to hit 1,000 subs. So yeah, any help with that is much appreciated. And thanks to everybody that's subbed so far. So getting into it anyway. Currently minus 60, mainly because of Carnival. As you can see, it's up and down quite a lot at the moment. I do expect over the next couple of years, especially with Saudi Arabia investment group going in, it will rise again. Hopefully it won't take too long to do that. It should hopefully be within the next year or two. It will take a while, obviously, because of the current situation with coronavirus. So as soon as that subsides, then hopefully within the next few months it should sort of start launching some ships again. Obviously it's in the hospitality sector, tourism, and they run cruise lines. So yeah, that's my biggest downfall at the moment. Everything else has slowly been going down, which to be honest right now I'd probably prefer, just because obviously I'm a dividend investor. Some of these I'd consider more growth stocks at the moment, like AGNC. That's dividend growth in my opinion, and they did reduce their monthly dividends down to 12 cents per dividend. So that brings it up to, it's not $2 a share now, it's $1.44 a share per year, and about, I think it's about 12 cents per month, so about 10p roughly, depending on the exchange rate per month. So I'm looking for stocks to go down a little bit at the moment. I'm hoping to pick up another 50 odd shares in Legal and General within the next few days. Probably going to be around Friday, maybe early next week by the time I do that. And then Energy Transfer, I might pick up another couple depending on the current price. Taylor Wimpey, obviously one of my largest positions. I'm going to be putting more in there. I did actually buy 0.7 shares just because I got a dividend from AGNC of 93 pence. So obviously I was investing previously. But now we're in a much better financial position, so we can carry on investing on a regular basis. Going to be laying down about anywhere up to £100, £150 per week. Some weeks I might do more than that. It purely depends on where the market's at and if there's any good deals out there. So moving on, agency we've covered. AT&T, they went ex-dividend a couple of days, got 2 shares in them. Looking to solidify that position. Also, if this video gets about 25 likes, then I'm going to be doing a monthly dividend investment guide on what I'm going to be buying, what I believe is good value at the time, and what I'm going to be working on in the next month, for the month of May. Okay, so moving on, we've got Legal and General. We covered Aviva. They've actually cut their dividends. Somebody told me, I believe it was either on Reddit or on one of the comments on one of my videos. So they've cut their dividend now, which is why there was a bit of a price drop. So yeah, I think it was about there. They cut it, which was, go up to date, on the 14th of April. Obviously massive price drop since they cut it because it was the final payment. So it was like, it's either 2/3 or 3/4 of their total dividend. They have 2 dividend payments split across the year. So they have a first payment, which is, I think it's about a quarter of the total payment, total payment being 10p. It was actually 30p, so it looks like they've announced a dividend cut there as well. I'm going to do some research. I might actually do a stock analysis on this before I do the what I'm buying in May video. So Energy Transfer, really solid position at the moment, really high dividend yield, 20%. They go X in May. I'm expecting an announcement on them, whether they're going to be reducing it, cutting it, exactly what they're going to be doing. But given their history paying high yields, I don't think it's going to be too much of an issue. They are paying out quite a lot, but they've got a history of paying out quite a lot compared to other companies. As you know, the oil sector does pay out more than most industries, and these don't focus on the actual mining, they focus on renting out the pipes for the companies. So as you can see here, complementary natural gas midstream, interstate transportation. So it's mainly the transportation of gas and oil, rather than the actual mining and the drilling of it. So it's more of a rental business, it's more of a REIT within the oil industry, in my opinion, rather than actual oil industry. And given their history as well, their price doesn't tend to, trading 212 doesn't go back that far. Only goes back to January when they actually launched it on this app. But they have a history of paying high yields, and it doesn't actually fluctuate depending on the price of oil, because obviously they still make the same money. They don't make any less money because of the oil price, because they still charge us the same rate to use the pipes. It's overheads for the actual oil companies such as BP, ExxonMobil, and so on. So going into allocation, 8 investments right now. You will see it fluctuate because the USA market is still open, the UK market is now closed. So my main position right at the moment is AGNC at 33.29%, Taylor Wimpey second, Carnival. That was initially about 25 to 30% of my portfolio, but I've been putting into more positions. I'm probably going to be picking up some BP, depending on the price, come Friday or early next week. I might actually go into Coca-Cola. Basically just going to see what sort of deals I can find. These are my main ones that I'm watching at the moment. AGNC, ExxonMobil, which I sold out of recently, but it has gone back down again now, so I'm thinking about going back in. Obviously it's not something I like to do, but personal circumstances I had to sell that share on that occasion. And then obviously on my watch list, I've got companies that I'm looking to go in on as well. Foot Locker is going to be one of the key ones, but they have cut their dividends, so it's going to be something I'll maybe look at get next year. Revolve, something that was mentioned by Jeremy on financial education. It's more of a growth stock. If you are into growth businesses, it definitely could be one to watch. When they went live on this platform in June, they were $42 a share. They've now dropped out of 10. Lows of about $7.5. PepsiCo's dropped as well a little bit today, which is interesting because they're not a bad yield actually on the company. 2.92%. Obviously I tend to go for a bit higher, but I am going to be sort of diversifying my portfolio a little bit more into blue chip companies. So obviously well-known companies like Realty Income, Uber. Uber is one that is a growth. It is currently not operating in the green. I do believe it is going to go up to about $45 a share by the end of next year though. So it's one that you could definitely make a lot of money on, but obviously it doesn't pay that dividend, so it depends on exactly what you're looking for. GlaxoSmithKline, obviously massive pharmaceutical company in the UK. Definitely one that I'm going to look at. Not a bad dividend yield on that, 5.18%, 80p per share on a £15, just short of £16 stock. So that's another one that I sold out of recently due to circumstances, but I'm going to look for a better price on that. I did sell out about the £14. I only had a couple of shares in it, which is why I chose to sell out of it. 3M's one to watch. I've got another dividend page on here somewhere. That was one that when I was first starting out I was looking to buy, and then go on to dividends here. So Main Street Capital, Brookfield. I originally had that up here, so I'm glad I sold out of that in time when I was initially investing. This is quite an old page, this one. Hasbro is definitely one that I'm going to consider going in on, just because a lot of people are locked up at home. I do believe it's something that people might purchase as soon as the lockdown comes a little bit clearer on how long it's going to be. And obviously, in case anything like that happens again, hopefully it won't, because it's a once in 100-year sort of thing that's happened. But I mean, a lot of people might realise how much money they're saving, so they might actually put some money into a company like that just to stay indoors a little bit more often. I don't think that's going to happen though, just because everybody's dying to get back outside now. So yeah, quite a few different ones within that one. Coca-Cola, as I mentioned previously, that was at a really attractive price. It's shot up a little bit now. Might be a little bit too much for me to go in on. If it does drop to about the $45 to $40 a share, I might purchase about 10 of them within the next couple of weeks. It purely depends on what I'm looking at. These are just popular, highly traded today stocks. So as you see, Snapchat's down, Nvidia's down, Alibaba is climbing as always. Slack, I don't know what that is. Twitter's been around that price for the past God knows how long. Yeah, I remember when they announced that there was loads of users on the platform with multiple accounts, and that's when it dropped down to about here. No, it dropped to about here. It'll have been when I relocated to Manchester. Okay, so I think that pretty much covers everything we're looking to do today. Thank you for watching. Don't forget to hit that like button. Don't forget to hit the subscribe button. And I look forward to seeing you in the next episode. Thanks for watching, guys. Bye now.